Welcome back to another session of the weekly forecast. This is going to be the it's going to be the forecast for the second week of February, 10th to 14th. Okay, so let's start off from the monthly candle. Right now, on a monthly, we are still in the expansion. We are still bullish. We are still in a bullish order flow. Because we have printed a down close candle on December, I believe the next up close candle, consecutive up close candles included, are going to engulf this down close candle here. So high time frames, we are bullish. Taking a look at how we have traded lower on January but failed to take out the lows in November, comparing it with Dow Jones, we have made SMT. So because of this, SMT price rejected higher, closing above 50% of this down close candle, which is good, which means that we are bullish. So moving forward, I would continue to look for higher prices and into all-time highs for all three indices. All right, so let's drop down into the weekly time frame. Clearly, we can see that we are in an accumulation. We're moving from discount to premium and premium to discount. This is the current dealing range for ES, and this is the current dealing range for NQ. All right, so TLDR, I am neutral for next week. It all depends on how Monday and Tuesday paints and then how CPI performs, right? So personally, I prefer to have accumulation on Monday and Tuesday, and then a manipulation on CPI, and then eventually we will have the expansion for the week on Thursday and Friday. Right, I hope that is clear. So if CPI manipulates to the highs, then I will look for lower prices if the higher time frame aligns. If, on the other hand, if CPI takes out the lows, then it would be textbook, because we are looking for high prices anyways, so the manipulation would be a very good indication that the low is in. So wait for CPI. My game plan is to wait for CPI and then look for a bias for the week. It's going to be quite late, I understand, quite late into the week, but no choice. They have placed the CPI on Wednesday. Okay, so with that said, I wanted to mention something. Yep, let's do a short review on Friday. Okay, so I made a community post on the YouTube channel prior to Friday's NFP. So I'm going to where is it? Where can I find it? Give me like a few seconds here. Right, found it. Let me just screenshot this. Okay, I'm gonna paste it here. So I think it was during the London session of Friday, I mentioned that I won't be trading because it's NFP, and I've made a reasonable amount of profits on Thursday already, so I didn't have to trade Friday, right? And in addition, I gave the bias for Friday, which is I'm bearish and I'm looking for Thursday's low. Eventually, we went down and take out Thursday's low, right? And then we somehow overextended a little bit. So I hope nobody, obviously I know that a lot of traders tried to trade this and got stopped out, a lot of live streamers especially, and it was interesting to watch, because if you are a regular watching my live stream for quite a while, you will know that I get very uncomfortable if I am shorting below the opening prices, especially below the midnight, especially below the daily candles open. So I guess this is one of the filters that worked really well for me so far for my live accounts, right? So the rule is to not short below opening prices and not taking longs above daily opening prices. I think that is very good, and you can use that information to capture the daily candles expansion, which I think is more than enough, because you don't need the full move, you just need part of it, and you would be buying at the extremes. So what else do I want to add on? Because I don't have anything for the weekly forecast. I'm waiting for CPI to paint, right? So let me just double check to see if I have anything else to add on. Alright, let's just go through the example of how I would utilize that particular rule that I've mentioned. So dropping into the daily of NQ, we can see that on Monday, price closed up higher, entirely closing up the new week opening gap. Okay, so at this point in time, we are definitely bullish because we have a gap lower, and then prices went up all the way. NQ failed to take out the lows here. Whereas when you take a look at ES made a lower low. So this is an indication of SMT. On Tuesday, we confirmed the SMT because it made, if Tuesday does not take up Monday's low, it also means that Monday's low is a swing low, which definitely confirms SMT, right? Because SMT is on 2 swing lows and 2 swing highs. So on Tuesday, back to NQ, on Tuesday, we closed the candle like this, right? Dropping down into the 1 hour. You can see that on Tuesday, what did price do? We open up all the way up here, and then the midnight opening is right here. So these are the 2 opening prices. We are bullish, so we're looking to long below the opening prices. Okay, for PD arrays and models like this, you can find them yourself, you can build them yourself. You don't need to use my model, but if you stay long enough, you'll figure out my model. Okay, so over here, buying below the daily opening and the midnight opening was definitely a good choice, right? Because we have the expansion higher and we're bullish. So let's just say you're not sure on Tuesday, but on Wednesday you are definitely very sure, because Tuesday gave you a very bullish price action, and on ES we have relative equal highs. All right, so price came back all the way down on Wednesday below the daily open. This is the daily open, and the midnight open is right here. It's exactly the same opening price, not exactly, but at just 1 point away as the daily opening price. So we came down all the way, and then right down here, or any price below the opening price, is a good buying opportunity to take out the at least Asia's high and or Tuesday's high, right? Because understand that ES has to take out Tuesday's high due to equal highs up here, and it doesn't have a wick above. So this type of candles are usually a very strong magnet, because when we take a look at candlesticks, how many times do we actually see candlesticks without a wick? Very few. So the chances of it leaving the candle like this is very low. Okay, so that's the narrative for Wednesday. And then on Thursday, same thing. If you look at my executions, I am buying below the daily open as well as the midnight open. So the midnight open up higher than daily, So price came back down, and as you can see, my orders are somewhere around these two candles here. I bought it the bus down here, and then the bus drove to the bus stop. Alright, so this is how I utilize the indication or the filter here. Alright, so let's just say I am bullish, but instead I bought at the above the opening prices. Okay, so for example, in this case, I bought it, let's just say I bought it after 10 a.m. when price has already expanded higher. Look at the amount of chop there is. Alright, and the midnight open right here, look at the amount of chop there is. Same thing for Wednesday. Alright, the midnight is here. Buying above, like let's just say after 9 o'clock, look at the amount of retracements that you have to endure. If you're looking for micro time frames like the 5 minutes, 4, 3, 2, 1 minute charts, you would be chopped out. And because recently the ranges are very big, it is very easy to get forced out of the markets due to emotion, right? Because you wouldn't be able to handle the kind of volatility if you're trading a size that you normally trade. Because in this environment, I think sizing down is a good practice. Okay, so over here on Thursday as well, right, let's just say you're still bullish and you bought it above the opening prices. Look at the amount of chop you had to endure. And then if you bought it up here above the midnight, look at the amount of rejection that it gave. So it is very, very tricky. Therefore, I have determined that the best price to buy, or the best place to position yourself, is below these two opening prices if you're bullish, and if you're bearish, you try to position yourself above these two prices. So on Friday, obviously I was bearish, right? I mentioned it, and this is the opening price for midnight. Right here is the opening price for daily candle. So we traded up all the way up here, and let's just say you're bullish up here, you must be out of your mind, right? Because if we don't print the high of the week on Thursday, we're definitely gonna print it on Friday, correct? So you're technically buying the highs of the weekly candle. That is a crazy move to make. Right, so anyways, let's just say you were bullish. Ignore this candle because it's the NFP candle, but look at the way you bought it up here, and then you just endured the retracement. You thought it was going for a retrace, but instead it gave a reversal. So this is pretty scary. And let's just say you tried to short, right? Because right here you know that price is going lower. You tried to short below the opening prices. Look at the amount of wicks. And these are not like small wicks. These are like 100 move wicks on the hourly candle. So for me, this is just way too hard to stomach in terms of the move. Therefore, it is a much easier and so much more comfort if you're able to position yourself above and below these opening prices. Okay, so if you watch my live stream, I have a card right on the top right that would determine how I would manage the position and what kind of exits I will look for depending on my entries, right? Entering in between these two prices are still okay, but your expectations have to be lowered because you're technically not buying at the extreme. Buying and selling at the extreme if your entry is in the middle of these two opening prices, right? So the best case scenario is obviously when your entry is below both opening prices or above both opening prices, and that is going to give you a very high advantage in terms of the amount of drawdown that you'll receive, and the expansion of the trade that you will be able to see, right? You don't want to see price do expansions like this, right? You want to see price do expansions like this, comes back down and then go up higher again, right? You want this type of low resistance liquidity run. So to enjoy such a environment, you first have to get in at the lows. For example, if you're bullish, and obviously after, if you're bearish, you get it above those prices, right? So look at this expansion down here. It was low resistance liquidity run, right? So this expansion up, it was low resistance if you have watched the execution on Thursday. And then this on the way up, just out close candles all the way, right? This is low resistance, one way trip towards the objective. Right here as well, low resistance, one way all the way up into this new day opening gap, whereby you can take out your partial or something like that, and then the very next candle just trades through the high. So this is, I think, a very valuable feature that you can use in price action. Right, but over time you'll see me use it, and maybe you might understand more of it, right? And that's pretty much it for the forecast and the review. I think this is more like a review of the last week's price action, right? Even though it's not very detailed, because I believe everyone has their own model, and trying to force yourself into somebody else's model is sometimes not the best way to do it. You have to figure out what is the comfort level, right? Because sometimes or some traders prefer to look for entries within these large range candles, and they have like a wide stop loss, or they don't mind getting stopped out a few times, like 1 or 2 times. That's fine, right? For some traders, they were able to do that. But for me personally, because I am naturally a perfectionist, even though I don't try to bring it into trading, because I know that is going to be the downfall of me. But because I am naturally that way, instead of changing my natural characteristic, I built a model that is suitable for my character, and I think that is the most important part, right? Because you want yourself to be comfortable when you're in a trade. If not, you will micromanage the trade, you'll close out early, you will be scared of your trade, things like that, right? And I wouldn't be able to hold through the entire range, for example. So yeah, and I think that's basically it. I'm starting to talk a lot of side topics. Okay, so with that said, thanks for watching, and if you like this, if you find it valuable, do leave a like, and if you have any questions, do leave them in the comments section down below. I might reply you, I might not reply you, depending on the type of questions. I think for questions, I think it's best that you leave it for the live streams. I'll be able to reply you right at that point in time. So yep, enjoy your weekend. For those that did not take any losses on Friday, for those that did, try to recoup it and come back stronger next week. I think you have a okay, you will have it okay, because we do have a break in terms of like Monday and Tuesday. It's probably not going to be high probability until CPI, right? So you technically have 4 days cool off period, okay? Unlike this week itself, whereby we have Monday and then Tuesday and then Wednesday. So you would only have 2 days, the weekends, if you took a loss last Friday, right? So the longer the cool off period, the better it is for your mind, because for your mind and for your mental capacity, because trading is just, I think most of it, if you can manage it in terms of like discipline and stuff like that, it's all on your mental capacity, right? You don't want to spend your mental capital. Alright, I think I used the wrong word. It's not capacity, but it's capital. You don't want to spend too much of your mental capital at the start of the week, and then you just drain at the end of the week. Yeah. Because when you do feel that, you tend to make more mistakes, and you tend to not respect your rules, right? And with that said, thanks for watching, and see you next week.